Hi, everyone. My name is Jermaine from the Bay Street Oracle, and today we'll be interviewing Robbie Pryde, CEO of Forthlane Partners. Robbie, thank you so much for joining us today. Why don't you tell us a little bit about yourself and Forthlane Partners?
Well, Jermaine, thanks for having me. Well, about myself, I guess we'll find that out through the course of the interview today. But I've been the CEO of Forthlane for the last 18 months or so. And before that, I spent 23 years at TD Bank. Previous to that, Newcrest Capital, which was really just a 5-year run at Newcrest. And I was at Nesbitt BMO before that. So been a long time on Bay Street, seen a lot over the years.
Yeah, and you're one of the most respected figures on the street. And I think you have a really interesting story, and we're very excited to tell that. I want to start with your early life. I understand that you grew up on a farm in Exeter, Ontario. You were one of 6 children, the youngest, in fact. A very different path than you walk today. Can you tell us what this was like?
Yeah, it was 6 kids, siblings. I was the youngest of the boys, so fourth youngest of the family. Grew up on a cash crop farm outside of Exeter, southwest Ontario. It was a great life. Really enjoyed farm life. The outdoors. We worked hard. We worked hard as a family.
Mm-hmm.
It was a difficult life at times. And taught me a lot for sure. And I would say that the biggest thing that it taught me was like hard work, resilience, just work ethic. And, I think I still carry that with me today. So, relatively humble beginnings. But I really enjoyed farm life. And I think the plan that my parents had and was my plan for the longest time was to actually take over the family farm.
Mm-hmm. And would you say like these same characteristics stick with you today? That early beginning, it really instilled the same stuff that allowed you to be very successful throughout your career?
Yeah, no, for sure. I think anyone's childhood it helps shape their lives for sure,
Mm-hmm.
their upbringing. And I'm no different than anyone else. So it's trials, tribulations, good times, bad times. We all go through it. I'd say that I learned from both sides. Some really great times, really great family life, and we worked hard together. We played hard together. We had a lot of fun together as a family. Had great neighbors. Learned about partnership from that perspective. And when you grow up on a farm, you care about a couple things. You care about the weather and commodity prices. And if the rain's coming in and you're trying to get a crop harvested and you're not going to get it done, and your neighbors come over with their equipment to help you out and get it done, that means a lot. And you return the favor. And so it's little things like that I learned growing up, just around how to treat other people. So I think that was really important to me. And then just, the work ethic that I just mentioned.
Mm-hmm.
It's long hours, generally. When the work had to get done, it had to get done. And, you weren't really in a position to not do it because your livelihood depended on it. So, so I look back very fondly. It wasn't a great ending in that the family farm got lost to bankruptcy. And that's another story.
Mm-hmm.
Yeah.
Yeah. And I know you talked about this in previous interviews about, the switch to finance, and you ended up switching to Huron University, originally studying at Guelph. I understand you began your career as a retail stockbroker, or an IA in today's world. Can you tell us what got you into this position and, what you liked about that role initially?
Yeah. Well, my plan, as I mentioned, was to take over the family farm. So I did go to Guelph. I took the Diploma of Agriculture course. My parents thought I lasted the year. I lasted actually a day. And I decided after a day that I was not going to do that, and that I then started looking at transferring, and it was to Huron to take economics. So yeah, I was harboring a secret, but so were my parents, and I didn't know at the time, but they were in financial difficulties, and we did lose the family farm. So that taught me a lot, and it maybe helped push me into finance a little bit, where I could see, at the kitchen table, the banker had all the power.
Yeah.
And we didn't have any power. And we're sort of at the mercy of the situation. That's reasonably young at the time, 18 years old, and it was a life altering experience where I didn't ever want to be in that position personally. I wouldn't want to see anyone else in that position personally. So it made me quite conscious of money,
Mhm.
saving money, but making money. And so I think that shifted me. So when I went to Huron, I had no idea what I was going to do. And it was just by luck, a professor asked me, and I said, I don't know what I'm going to do. And he said, you should think about being a stockbroker, which you say is today's IA. I said, what's a stockbroker? And anyways, that summer I took the Canadian Securities course with a great friend of mine, Doug Raymond, who's still on the street today, one of the most respected PMs at RBC. We took the Canadian Securities course together that summer, and then that following my last year over Christmas, I went up in my high school graduation suit looking for a job in London, Ontario. And no one wanted to hire me. Why would they? I looked very young, and I was young, but I went into the Nesbitt office, and the branch manager at the time, Don Schaefer, was probably in his mid-60s, and anyways, took a liking to me
Mhm.
and ended up offering me a job. And it's a great story. Don, just before COVID, I ran into him in the underground.
Wow.
And Don would have to be in his late 90s, mid 90s, and he's still going. He was still a broker,
Wow.
an IA. So it was shocking. But anyways, he took a chance on me, and yeah. So I guess I started my career in wealth management, and it's sort of full circle for me.
Yeah. And then you took the big risk to move to Toronto and focus on the institutional equity side. What enticed you to take that risk? And at the time, did you know that you were going to spend a significant portion of your career surrounding institutional equities?
No. So I guess that was the move to Toronto was my second bold move. The first was to leave Guelph, the idea of farming, I suppose, and going into the world of finance. The move to Toronto was actually to still be an IA. I had become the assistant manager in the London branch, so they moved me to Toronto to be the assistant manager in what was then the King Street branch for Nesbitt. And it was there, so it was a big move to leave London and come to Toronto for me. And then after a short while, Bob Dorrance, who was running the institutional desk at Nesbitt, approached me about joining the institutional desk. And I guess when I found out what he was going to pay me, I said, well, why would I take a 50% pay cut to go and do this? But I thought about it, and what I really liked was the idea of just a more sophisticated client base and a different challenge, just something different. And I was always about doing, more and challenging myself, and that to me was something new and challenging. So I took the risk, I guess, on myself and made that move.
Yeah. And then after spending a couple of years on the institutional side, you explore this idea of branching out and the idea that you can do this better. You co-founded Newcrest Capital with, I understand, 8 other individuals. How did you get connected with this network, and what gave you that confidence to really bet on yourself and bet on your coworkers to go out and do this on your own?
Yeah, it was a big bet on ourselves, but living it at the time, did it feel like a bet? Not really. It felt right. And why did it feel right? It's always time and place and circumstances. And at Nesbitt, we had a great desk. I really enjoyed it. Really worked with really great people. And that was one thing I learned really early in my career, that just surround yourself with great people. You don't have to be the smartest person in the room. You're probably not. But if you surround yourself with really good partners, good results happen. So while at Nesbitt, Bob had made a couple of hires that I think really did change the direction of our desk of the firm at the time, and for me personally. Yeah, that was John O'Sullivan and Doug Dawson came over from Gordon Capital. And to young people like you're not going to know what Gordon Capital was, but at the time, in the late 80s, early 90s, Gordon was like the block trading king of the street. and really they pioneered the bought deal in Canada. Really impressive group of traders, salespeople, investment bankers at their peak. It was an amazing firm in a lot of ways. So John and Doug joined the Nesbitt desk, and my eyes got open to a lot of things, which is, wow, the relationships they have are better relationships than what most of us have at Nesbitt. Their access to large blocks, and back then block trading was a really big deal.
Mm-hmm.
So it really changed how I thought about the business and what it took, and very idea and theme oriented with their approach to dealing with clients, and clearly had clients that were very close to them and really trusted them with their trading big blocks of stocks. So that was a big eye opener for me. I had always, since I got in the business, wanted to have my own firm.
Mm-hmm.
I don't know why, but I guess at the end of the day, I do like leading, and that was just always a goal of mine. So, in the early 90s, towards the mid 90s, the four pillars had fallen. The banks were allowed to buy dealers, and they did. And so it disrupted the street. But in Canada, the independent dealer always had a place. And there was a long history of really strong independent dealers. And okay, we can go out and do this because we're pretty good at what we do. We have relationships.
Mm-hmm.
So a few of us decided, okay, let's take a risk on ourselves. And it was a big risk in some ways, in that, the banks are formidable competition, obviously.
Mm-hmm.
It took them a little while to get the dealers integrated, but it was starting to happen. And I think that our view was that there's still enough disruption in the industry that we could probably go in there and capture some market share. So we, after the Nesbitt Burns merger, we said we'd give it 1 year, and we gave it a year.
Mm-hmm.
But during that year, we'd done a lot of thinking and planning about the next step. So that was the formation of the 9 founding partners of Newcrest, and I think it was 5 from Nesbitt, and 3 from Gordon Capital, 1 from Sprott. I'm forgetting one, but that was the rough makeup of the first group.
Yeah. And in that time, like, how are you competing with these big balance sheet banks with no retail deposit backing or balance sheet? What does that look like in terms of the risks that you guys were taking in these transactions?
Yeah, well, again, that was talk about risk. That was career risk number 3 for me and for other people as well. I borrowed money to start Newcrest, so
Yeah.
I was just young enough, and I just bought my first big thing, which was a cottage the year before. So I didn't have a lot of cash around, and we had to leave 2 weeks before getting paid our quarterly bonus, and it was the biggest bonus that was ever going to come my way.
Yeah.
I left it on the table. And why did I do that? Because I wanted to be with this group. We really believed in ourselves and trusted in each other. So the model was to do what we thought we were good at. At the time, block trading was really important.
Mm-hmm.
Having a strong research analyst and strong research opinions was very important. And that could lead to investment banking business. And that was our model, more or less. And so really strong sales, trading, research, call it distribution, and then knock on doors of corporates saying, we're your number 1 block trader or number 2 block trader, got big market share, we've got an influential analyst, and by the way, we can do a bot deal for you. And and that's that's where you really are putting yourself at risk, because when you buy a deal, you own a deal, and when your capital base is your own money, and this your kind of life laying there, you really have to trust the people around you that you can get this done, and then trust the corporates to be fair with you, and your clients wanting to buy the stock that you just bought in that bought deal. So
Yeah.
so it was fraught with a lot of risk, but that built a really strong partnership. And, I remember our first bought deal and what a big deal that was for us. And it gave us a bit more confidence and could buy bigger deals.
Hmm.
But it was really driven off of themes and going really deep with either a company, a stock, or an industry, and trading it and owning the trade in the name, so that the client base had to come to you if they were looking for blocks of stock. So that was sort of the model that we started out. So we could compete against the big banks with that model. But as the years passed and we got towards the late 90s, a few things had changed. So the banks had gotten bigger and better. Balance sheet was mattering more. At Newcrest, I think we sort of realized that, yeah, we can do small and mid cap, but we really like doing large cap names too, because that's what we were born and sort of bred to do. So, underwriting larger names meant, the need for more balance sheet. At the time, in the late 90s, the U.S. banks were coming back to Canada pretty strongly, and created competition, and they had balance sheets. And then, the dot-com era really drove everything home. And so, we weren't looking to transact at Newcrest, but we did have suitors come to us. Some U.S. Dealers did come knocking on our door. We didn't really take those too seriously. We were pretty happy doing what we were doing.
Yeah.
But when TD came knocking, what changed for us was, I think, where a 1 + 1 could actually equal more than 2. And, TD was the only bank that hadn't bought like a significant dealer. So they more or less greenfielded the TD Securities, done a good job. TD Securities was a good dealer, a real dealer. But what we had probably was what TD lacked the most, which was, that institutional equities, sales and trading. TD had pretty good research, and TD was building at the time a pretty nice investment bank. But we certainly were accretive to the sales, trading, and investment banking side of things, as well as research. The folks that we brought over from Newcrest added to that as well. So it really was a combination that worked for both sides. So for Newcrest, it gave us balance sheet, it gave us a larger platform, and we're happy to do that. And for TD, it added the strength that they were looking for.
Yeah. And I know you had mentioned, this wasn't supposed to be a permanent move for you. You mentioned you like being involved in your own businesses and you've always wanted to have your own firm. So I understand that this was kind of a temporary move and the plan was to do it again. What changed and what did you like so much about TD that you wanted to spend a significant amount of your career at this institution?
Yeah, well, I'll speak for myself. And then, of course, there was close confidence where we thought, okay, 3 years and our handcuffs are off, meaning we got paid out in cash and stock, and the stock vested over 3 years. Excuse me. Then, maybe we'd go and try it again. But what changed, I guess, over that 3-year period was a few things. TD itself changed and evolved quite a bit. So just before the Newcrest purchase, TD did a much larger purchase, which was Canada Trust. So Ed Clark was the CEO of Canada Trust. So Charlie Bailey and Ed did a deal just a few months before the Newcrest deal. So TD was transitioning into a much larger player in the Canadian banking industry, and really bringing a big retail client-driven focus to TD. So that fit in nicely with what I thought, we were good at Newcrest and what we could do with TD Securities. So, I think that was a bit of a game changer, just what was happening at TD. And then, getting inside the doors of TD and meeting the people at the dealer, it was really filled with great people. And it felt good. So the culture was probably better than we had expected or hoped for. And then, I think Bob Dorrance was promoted to head of the dealer. I got promoted into the head of what that was then known as TD Newcrest. Putting some of the Newcrest people into leadership positions, I think, mattered as well. And we were a pretty close-knit group. So it didn't work for everyone.
Mm-hmm.
Some folks did opt out and choose to leave. But that's just all personal decisions about their time in their lives and whether it was working for a bank, or not. It's irrelevant. It's just people make decisions. But a good core group of us, hung in there
Yeah.
and then, I think helped grow, evolve, and change TD Securities.
Yeah. And joining the dealer, a larger platform, and going from a private to a public institution, obviously you went from a co-founder to a senior leader in such a larger organization. What kind of dynamic did this present to you? Was there some opportunities that opened up doors? Was there any, growing pains? What was that dynamic shift like?
I was always growing pains every stage of my career, but I would say that like it didn't feel like a huge organization. It was small enough that you got to know people.
Mm-hmm.
For me personally, I always been ambitious, and I think all the partners are ambitious, but I was ambitious and quite curious. So I cared about other parts of the firm. I wanted to learn about other parts of the bank, other parts of TD Securities. And that curiosity probably led me down roads with people, friendships, then responsibilities around the dealer, because I stuck my nose into things and tried to learn. So I think that is probably what made it work even more for me, is I was allowed to try different things.
Yeah.
And and some of those people that I met over the years are still great friends today, and some are, remain partners right up till the end. So I didn't find it to be a difficult conversion back to a bank. I actually quite liked the culture at TD Securities. And then what I think we maybe brought a little bit from Newcrest was just that sense of ownership. Think like an owner. It became a tagline.
Yeah.
At the dealer is you need to think like an owner. And that's when you're Newcrest and you borrow money to start Newcrest, it's skin in the game. If you fail, well, you're back at square one. And you need to think that way, I think, at any organization, no matter how big or small, to really make it work. And be fully committed to what you're doing day in, day out. And, people need personal lives. You can't eat, sleep and breathe, work every day.
Mm-hmm.
Well, you need to be committed. And, I think that the majority of us were just super committed to making this work. And, we felt like we owned it in a lot of ways and felt responsible for carrying through on growing the firm. And, it's a competitive environment. You've spent some time already on the street.
Yeah.
It is competitive. And if you don't give it your best every day, you're going to get passed. And if you like to race, you don't like to get passed. So, so that, I've always felt driven every day. And so, it's a long answer to your question, but whether you're an entrepreneur or whether you're working for a large organization, you have to think and act like you own it anyways.
Yeah. And you kind of answered this in your last question a bit, but I want to go back to it. If you look at the modern TD platform, there's a lot of Newcrest alumni still present today. Obviously, Bob Dorrance, David Ward, Scott McNichol, Drew McIntyre, Tim Wiggin, yourself, you all went on to be highly successful at TD. What do you think was so special about the culture, the development of talent that you had at Newcrest that integrated so well into TD?
Well, you mentioned some names, and there's a lot of other names too that could get mentioned as well. Well, I think there was a bit of magic at Newcrest. There was, just the right people at the right time. And, it's who you are attracts certain types of people. And, it's the whole IQ versus EQ. The street's filled with IQ. It's brimming over the top. The real difference maker, I think, for people in their careers or for firms and their cultures is how much attention you pay to the people, the EQ side of things, and so that's was part of the magic formula, if there was such a thing, at Newcrest, and then at TD was the focus on culture
Mhm.
and making sure that the culture was at the top, that it was a competitive place, but a comfortable place to work, where when you wake up, I don't want to go in and work with these people around me because they're obnoxious or they're not nice or they've got their elbows in my face. That was the opposite of how we and how I like to run businesses. It's about the culture, and the more comfortable people are with their partners, and the more they trust them, the more output you're going to get, and that's just business 101. So yeah, that was a I guess part of the secret sauce, excuse me, of why people stayed and did so well is the want to work together, to continue working together, to know when you've got a good thing. And the old saying, the grass is not always greener, it's very true. And I think quite often when some people moved on, there might have been some regret that where they went wasn't as culturally deep as the place they had just departed.
Yeah. And now taking a look at, the scale of the business over the years, obviously having joined in 2000 and leaving in 2024, the dealer has grown tremendously, not only in the presence in Canada, but in North America as well. I understand you had different portions of the wholesale banking business roll up to you throughout your different roles. Can you talk about your thought process in scaling the business, your approach to growing with your client base? How did this look like, and how did that evolve over your career?
I feel like I'm giving a history lesson here on TD, and it may not all be accurate. So this is Robbie Pryde's view of things, and don't hold me accountable for what's real and what's not real. So I would say that TD Securities, when Newcrest arrived, was a bit more trading oriented, and I think over the first number of years with Bob and Ed, it was getting away a bit more from the trading side of things, and meaning the more exotic derivative type of trading that ultimately in 2008, 2009 did a lot of damage to a lot of dealers. TD managed to come through it not unscathed, but not damaged too badly. So I think that was the biggest thing that I think helped shape the dealer was moving to more client facing, client oriented, and more fee based versus the trading revenue side. So, and that's a generality because of course all dealers make a lot of money with trading revenues, but it's about balance and diversification. And I think that's really what I'm trying to say here is that TD Securities became a much more diversified and scalable organization. And then when TD Bank started acquiring retail franchises down in the U.S., starting with Bank North, and ultimately with Commerce Bank in 2008, it really opened up the doors further in the U.S. for TD. TD had always been Securities always been down in the U.S. TD Bank had been a lender for years down in the U.S. But I think the name brand recognition, and then there was TD Ameritrade as well. That certainly was, the TD Shield was getting much better known in the U.S. So that meant opportunity for the dealer, and so we worked on seizing on that opportunity in the U.S. And then I think as my time at TD was drawing closer to the end, we really had identified that we probably needed to buy something in the U.S. to get the scale that we needed. And that was one of the last things that I helped out with at TD Securities before I left was working closely with the TD team, Riaz Ahmed, and in going down to the U.S. and finding a suitable partner for TD. And Cowan was I think, head and shoulders above anyone else that we had talked to. And so I spent some time, obviously, working on that transaction and helping integrate for a period of time before I left to join Forthlane. But I think it's working out well. I hope it does. Yeah, I think it's been a journey for the dealer, but they're getting to a really good place.
Yeah, thank you for sharing. Great little history overview.
Over too much history.
So I want to bring attention to around June 2024 and the decision to move to Forthlane. You'd spend a lot of time at TD. What did you like so much about Forthlane, and what, got you really behind the institution that you wanted to join and be a part of this next chapter in your career?
Okay, so I don't think it wasn't Forthlane that was the decision maker for me. Forthlane was the result in the end. How did I get there? Well, it's kind of that full circle that that I talked about earlier, where wealth management was something I'd been around my entire career. I started out in it, but on the sell side of the street, doing what I did through my entire career, I studied the buy side, knew the buy side, a lot of friends on the buy side, and always thought that's maybe where I'd end up ultimately at some point. And then when I partnered up with Rob Vanderhoof and Peter Grosskopf, the driving thing for us was, how do we want to invest our money? And I think that was really what shone the light on Forthlane in the end, which I'll sort of get to my decision, which was don't want to be 60-40 or equities, fixed income, and cash. The world's much more sophisticated than that. The investing options and alternatives are much greater, and it's a changing marketplace. So our view was, how do we want to invest our money? That's how we started out thinking. And certainly Rob's experience at Greystone Managed Investments was alternatives for institutions, and same thing for Pierre at Sprott, which is called alternatives as well. And so that, okay, this is what we want to do. And much like when we started Newcrest, it's buy or build. And to build, you can do it, but it's takes a little longer. And if you can buy something or buy into something, that can shorten your time frame and give you infrastructure, give you your license, and give you a head start. So use TD to go out and scour what we wanted to do. Realize that in Canada, probably what might be missing more than in the US and in Europe and other jurisdictions was the outsourced chief investment office framework, so OCIO. So that's what we became focused on, because that's how we wanted to run our money. It was like a sophisticated chief investment office, but we can do it for other people. And we can take our years of expertise and put that on display to ultra high net worth families, and we'll do a really good job for them. Yeah, so that was the plan. And then while we were looking for our platform, we came upon Forthlane, and Forthlane was doing exactly that. So they were an OCIO. They had morphed a little bit since their existence began. I guess 2018 with the formation, 2020 when they allocated the first capital. So they had spent 4 years, building a franchise. So that was a head start. And so that's sort of how it came to Forthlane. Forthlane is what we were looking for. We just didn't know we were looking for Forthlane.
Yeah.
Yeah.
And for the viewers, can you explain, Forthlane's business model, the clients that you serve, the significance of having an OCIO and how that complements your clients' needs?
So we studied the market, especially in the U.S., and realized that there was room for lots of growth for an OCIO model in Canada. And, so who does that serve? It serves really, it's ultra high net worth. If you're asking what our target audience is, it's ultra high net worth individuals, families, family offices that have existing CIOs, where they want to tap into our ecosystem. And we're perfectly suited for endowments and foundations and small institutions that maybe don't have the bandwidth from an investment team point of view. So like we have the a luxury here, I think, of co-CIOs that have both run hundreds of billions of dollars. Our model is it's institutional quality investing is how we describe ourselves, global institutional caliber investing. And why do you want to invest like an institution? Well, if you look at the evolution of, say, the Maple 8 in Canada, in particular Ontario Teachers Pension Plan, where one of our co-CIOs and the founder, Wayne Cozen, came from. I watched Wayne his entire career at Ontario Teachers. So Ontario Teachers went from basically T-bills to stocks and bonds and T-bills to one of the most sophisticated investing organizations on the planet, which most pension plans and sovereign wealth funds globally have patterned themselves after. And so why do these pension plans and sovereign wealth funds invest this way? It's to really focus in on diversification. And you're trying to eliminate as much volatility as you can and give yourself the highest probability of earning good returns. And what are good returns? I think 8 to 10% for any ultra high net worth family means you're kind of hopefully doubling your money every 7, 8, 9, 10 years, and taking a third or half the risk that you would be in a typical call it 60-40 type of portfolio. So I think that's attractive. I think that style of investing should be attractive to anyone at any age, and because it's just the magic of compounding and not putting yourself at risk for those large drawdowns. And for anyone who doesn't know what a drawdown is, it's just a loss in the market. So if you go through like 08, 09, which for me personally was not pretty from an investing standpoint, you could be down 30, 40, 50%. And then you have to earn double that to get back to where you were. And yes, if you ride the market perfectly, the S&P's average 10.5% for the last 25 years, whatever it is. But you have to invest almost perfectly to achieve exactly that. Where I think we really believe in putting your eggs in many different baskets and reducing the risk of any big drawdowns, and just give yourself, as I mentioned, the highest probability of 8, 9, 10, 11% returns.
Yeah. And in your role at Forthlane, you're the CEO. What does your responsibilities look like, and what is your day to day, if you were to describe it?
Well, maybe we should ask my partners what my role is, but it's similar to what I used to do in that you prep for big meetings. You need to be strategic. It's very competitive. We have lots of great competitors, and you need to keep up with what's going on in markets, what your potential investor base, client base is looking for, needing technology, compliance, I think the regulators. There's a lot, going from hundreds and maybe even thousands of people to 20. You think, it's a big change, but not as big as you think. It's so the day to day, it's guiding the firm strategically. I work closely with my partners. I have the luxury of having just amazing people, a number of which could be in my chair, for sure. But we just work together really well, and so I collaborate, and then the young folks. The great thing about Forthlane is we didn't have to come in and change a bunch of people out. The young, I'll call it up and comers, but then in many cases arrived a while ago, are tremendous and wise beyond their years, and it's hard to find. You can't really look at a resume and say, this person carries wisdom at the age of 25 or 28 or 30. You have no clue, and it's hard to find that in interviews. So some of it's just luck, but we're very lucky to have some really good people already on board here at Forthlane.
Yeah. And looking at Fourth Lane's team, there's a large presence of senior leadership from large institutions. Do you feel that that adds to your advantage or your differentiation compared to a traditional private wealth management or ultra high net worth family office when it comes to serving your clients?
Um, well, of course, we sing off our own song sheet. So yeah, I'm really proud of the talent we have here, and it's formidable. There's no question about it. There's a lot of experience, and people have done some really big things. And I think one of the key things is just about every one of us has spent our entire careers dealing with institutions. And is that a plus or a minus? We see it as a plus.
Mhm.
Um, but again, our competition has lots of great people as well. But I think a calling card here would just be the depth of the bench that we have in terms of senior people. But we're very focused on succession, and so it's it's a, it's about to be 100% employee owned, um, from or 98% employee owned. Um, Everyone needs to have skin in the game, and it's really important that everyone working at Fourth Lane has equity, and then you're always trying to do the right thing for the client, because if you don't have the client, then you don't have growth. And so it's really about getting everyone aligned in terms of how they think. When they wake up, it's all about doing the right thing, and I think that's a significant part of the culture at Fourth Lane, is it's employee owned, and that you have to put the client first. And it was like that whether it was at Newcrest, Nesbitt before that, and TD. If you don't put the client first, put yourself first, your firm first, you're going to come in second, third, fourth, fifth. You're not going to win.
So looking ahead for Fourth Lane, what keeps you up at night? What are you excited about?
Uh, what keeps me up at night? Our dog, um, who's a sweetheart. Um, it's like any business. You don't want to fail, so, um, that's not in the plans. And I really hope that wouldn't ever happen. So yeah, like what I've always done, I've surrounded myself with really great people. I do like the lead, but I like people's opinions, and then at the end of the day, I'll maybe make the decision. But so I think everyone feels like they have a voice. That's really important. And no matter who, it doesn't have to be one of the founders, or it doesn't have to be one of the top shareholders at top partners. It can be anyone. Like, everyone has great ideas, so I want to hear them. It doesn't mean I'm going to act on it necessarily, but I'll take it in. So it's really just about growing the firm properly. So does it keep me up at night? Yeah, you don't want errors, you don't want mistakes, you don't want any clients to be upset because you did something wrong. So I worry about that. I don't worry about performance from an investment standpoint. That doesn't keep me up at night, because of the way we invest is just so diversified and so uncorrelated that, when the market it fell, both fixed income and equities in 22, I don't know, the average portfolio is down 10, 12, 15%. In Canadian dollars, Fourth Lane was up. So in US dollars, it was down just a little bit, if I'm remembering correctly, the performance end. But in the April drawdown happened this past year, markets dropped pretty quickly, 10, 12%. I think at worst that month we were down 2 and finished up on the month. So
Wow.
it's the sleep at night, so for us to do a lot of damage to someone's portfolio, the world's on fire.
Yeah. And taking a step away and looking at your career as a whole, I think one thing that we can notice from the theme of this episode is, the taking the risk and taking those leaps, where the outcome is uncertain. What did this teach you, and what are your kind of key takeaways from taking those risks in your career?
Well, you have to believe in yourself, and sometimes that's hard. We're humans. So it's like, should I do this or not? You're filled with doubt, but I always took the leap because I've always believed in myself, and part of that belief system gets anchored. And I'm going to sound like a broken record. It's because you find great people that you like and you end up liking to work with, and you think alike. So, like, it's okay to have conflict within a business once in a while. It's healthy. But at the end of the day, you all need to get to the right place. And that right place has to be what works for the client. Because what we do day in, day out is client driven. So, so if you're not in that mindset, then you're not going to be a very good partner, and it's not going to work. So, yeah, so I think that that's really the key thing.
Yeah.
Jermaine, that matters the most.
Yeah. And Robbie, you've spoken a lot about surrounding yourself with like-minded people, with good people who have the right intentions, and recognizing that you're not the smartest person in the room. I'm curious to hear your take on mentorship and, how that has positively impacted your career throughout.
Yeah, well, I really believe in it. I think I hope anyone that's worked with me over the years would say that generally I try and help people out. It's in me. That's what I like to do. It's what I want to do. When I started the business, I was so green. Like the greenest grass you could imagine. That was me. And it's so I remember, like, even in the branch in London, and these people know who I'm talking about. They were really helpful. They're good people.
Mm-hmm.
And yeah, it's a little competitive because you're out there trying to win, people's portfolios, and you might be running into each other a little bit. But that started me out on the right path. And then, I think my experience, I've mentioned Bob Dorrance. Bob doesn't outwardly throw advice around. It's more just watching and learning. And I think that's what I've been really good at in my career, is just watching people and learning from them. But yeah, like Bob was a great mentor over the years. But even some of my partners, Newcrest, TD, they didn't know they were mentoring me, but they were.
Yeah.
And, same thing, I didn't take everyone under my wing at TD, but I certainly took a number of people under my wing. But even those that, I guess, when I speak, hopefully I resonate with them a little bit around something that helps them in their career or helps the firm along the way. So it's huge. And that's why, COVID was difficult, because it took away that apprenticeship model.
Mm-hmm.
Where, young people who were starting their careers or early in their careers were not able to, work around a desk or around people where they could just go tap them on the shoulder and, go grab coffees and lunch and whatever. It was really a difficult period. We're through it now, and, I think people are mostly back to work. But it definitely, I think, proved out the model in my mind that you're way better in an office, and you're better to be able to actually look someone in the eye versus through a screen. It's just, you're going to learn more and you're going to observe more.
Yeah.
And that's so huge on mentorship, and pay it forward, right?
Mm-hmm. And on that piece, if someone out there who's watching is looking for their mentor, and what characteristics did you find in someone that you wanted, that made you more incentivized to help them out, to mentor them, to teach them some of the stuff that you've learned throughout your career? What do you look for?
And someone who wants to help. I think, there's some people maybe just have expectations you'll help them, and they're waiting for it, and hoping for it, I guess. It's much better if you just put up your hand and say, like, would you help me?
Mm-hmm.
It's identified, and then it's a lot easier to put it in motion then. So, I guess if you're asking what advice would I give, put your hand up and find yourself not just one mentor, but hopefully a few, and then you'll sort of zero in on one or two that really resonate with you, and you resonate with them. And then the next step then is sponsorship. No matter what size firm, you need someone that actually will help you move forward. Sure, you can do it on your own, but everyone likes advice.
Yeah.
And if you can make it smoother, easier, potentially quicker, then why wouldn't you? But you have to earn it, right?
For sure.
So yes, I mentored a lot of people over the years. The ones that I really stuck with were the ones that really cared and really listened. And not that I'm always right, but you could tell that they were absorbing, and I think it mattered to me that they cared.
Yeah. And one thing that I think that you've touched upon previously that's so special is the abundance of IQ and then the more need for EQ on the street, and what it allows you to be successful. In your leadership style, how did this, level of EQ help you go forward, and how did this help you get into the position you're in?
Well, I think I don't have a magic formula, but what I think I'm good at is putting myself in a position like you right now. How am I resonating with you? I try and think about what are you seeing and hearing from me.
Mm-hmm.
I will look for your body language. I look for your expressions. What's working, what's not working. And, I think you get better results if you're paying attention to the person across from you or the people in the room. You try and read a room, and instead of trying to take over a room, if you can play into the room, you're going to have better results, I think. And it's not like being a chameleon and not being true to who you are. It's just you've got a toolbox of talent, of things that you can say, do, whatever. And it's okay. How do you utilize that? And if you go in with just one playbook, it may work or it may not.
Mm-hmm.
If you can't call an audible, sports analogies here, but if you can't call an audible along the way, you're probably going to fail in that meeting if you need to call an audible. So you have to be aware of what's happening in that meeting, whether it's pitching an investment banking transaction or trying to convince a family that they should trust you to manage their millions of dollars. So it's reading people, reading the room, and I think that's what I think EQ is really all about. And and I guess the biggest part of EQ is empathy. It's caring about people, and so you care about who you're talking to, and then when it comes to leading, like I cared about people. I care about people a lot. So and then people know that, they read that, and I think that because I want people to care about me. So
Yeah.
so you just give back, and so I think in some cases the business world lacks it, just and the empathy needed to really motivate people.
Yeah. And on that note of giving back, you've been involved in a lot of charitable causes, arts, and educational as well. What's so important about these causes to you, and how important is it to you about giving back?
Well, I've stayed, like I'll use the word, but hope it's taken the right way, humble. Like I remember my roots, and yes, I have nice things today, and it's a different world than I grew up in, but I also have been very generous over my lifetime with my time and with I guess charitable donations and just doing things well for people. So it's super important. Communities are communities, no matter how big or small. Like, I grew up on a farm, and it's a smallish community. Toronto's a big city, Canada's a big country, but it's all a series of communities. And you have to give back to that community. And so I feel very fortunate to have been in this business and to have achieved anything that I might have achieved to this point. As far as education, schools are important. I didn't know what a private school was growing up. It took till I got to university that I figured out what a private school was. But these private schools do need funding. Hospitals need funding. The arts need funding. So I've sat on boards, and I'll sit on more boards. The United Way, it's a very big deal everywhere. And so I've been a big contributor to United Way over the years. And so I just believe in giving back.
Yeah, beautifully said. And one final question to round it off. If you could do anything differently, if there's a message to the young Robbie, what would you say to him?
Well, I'd say don't make as many stupid mistakes. But if I did make those stupid mistakes, I wouldn't have learned and benefited from those stupid mistakes. So no, like I don't have any regrets. Yeah, there's points in time where I wish certain things, you know, I'd never worked outside of really, we'll call it London, Ontario for a short period of time with Toronto. Traveled to a lot of other cities, but I didn't work in New York. I didn't work in London. I didn't work in Singapore or Hong Kong or Sydney. Um, if you had the opportunity and you can do it and it doesn't derail you, like that would be great. So by all means, I took enough career risks. So I would just remind myself, trust in yourself and take career risk. It's worth it if you're worth it. It's worth it. And just be a good person.
Awesome. Thank you so much.
All right.